All right. Good morning, good afternoon, good evening, everyone joining from all over the world. Welcome to day 3 of the Africa Fintech Replay 2025. Over the last 2 days, we've had to examine how capital moved, we've examined how products were shaped by constraints, and how some decisions made under pressure resets the entire ecosystem. Today, we are going to be focusing on how we turn our focus to scale, not as ambition, but as execution. We are going to be talking about expansion, sequencing, and and highlights on some ecosystem intelligence, and where we are in terms of strategies that were tested, assumptions that were exposed, and some long-term winners that have been clearly defined over the year. 2025 saw a lot of scale. We've realized a lot of companies are fast moving in terms of lateral expansions. Today, we are joined by experts in that area who will be sharing their experiences and their accounts from where they sit. And some of those choices are now shaping the contours for 2026. We are joined today by I always love that I have my friends on this conversation. And we are joined by Andile Masaku, who is executive producer for the African Tech Roundup. We also have Jeremy from Ezra, and then we have Tendai from Mukuru, all touching on expansion, scale, and focused on the continent as a whole. And this is a very interesting conversation, guys. I'm very excited to have you guys here. I don't know if you are happy to see me again, or you are more excited about the festive season than you are about seeing my face. So thank you all. I'd love to give you guys first words before we get into the first segment of this conversation. So over to you. We can start with Tendai.
Hi, Foster, gentlemen. Great to be on the chat today. And Foster, I mean, you got us on literally the last Friday of December, So this is when you call it a roundup. When you call it a roundup, you literally have your friends on this call, because we might be the only ones that agreed to this But honestly, I feel like it's very much timely, because it's a great way to round off the year. Because I think sometimes we end up rushing, trying to close off contracts, trying to close off initiatives, and trying to send off the last email. And then you run off and you actually haven't had a chance to reflect on all the things that have happened in the industry, in the organization, and plans for next year. So honestly, I think this is a great way to kind of shut my laptop straight after this. But I mean, I think a quick intro about myself. I'm Tendai Tizirai. I am head of expansion for Mukuru. And for those that don't know, Mukuru is a remittance-led neobank, the largest, I would say, in Southern Africa, and also expanding across Africa. And I think essentially remittance-led neobank focusing on cross-border payments. But put simply, our goal in life is to serve the African consumer, ensure that they have access to as many financial services as possible, scale that, make impact, and have fun doing it. So I think that's kind of what I wake up every day thinking about: making an impact, making sure we're having fun and we're innovating, and making sure it makes a difference to the person on the other side.
Super. Jeremy, first word?
Yo. Yeah, no, obviously I'm excited because it is the festive season, but your face doesn't hurt either, Foster. It's good to see you again. I was expecting that you'd be I was expecting that you'd be here so that I can get to see you, but no worries. I get the amount of work that needs to be done. But yeah, excited to be here. I love these conversations. I'm always a fan of listening to different perspectives from different industries. To follow suit, to give my background, I'm currently the regional director for banking partnerships and expansion at Ezra. Ezra is a data-driven, lending-focused fintech that partners with large banks and telcos to deliver access to digital credit across the continent. But at the beginning of this year, I was working as the general manager at Jumo and CEO for Ghana. So the Mukuru project was, top of my list before I had to transition into now market expansion at different capacities. So I've gone from market deepening, building culture, to now planting flags in multiple markets in business development. So I've had quite a year, but I'm definitely looking forward to sharing some of the experiences and insights that came out of that. Cool.
I feel privileged to be to have a front row seat to people who are actually entrenched building in the space. So today I I extend my role as an executive thought partner. Otherwise, under normal circumstances, I'm the co-founder and executive producer and lead journalist at African Tech Roundup. We're in our 10th year covering the African. Thank you.
Happy anniversary, sir.
Thank you very much. The African digital transformation trajectory, and a specific editorial focus is the intersection of the so imagined digital economy that's emerging and the real economy. And so we mine that intersection. If you think of it as a Venn diagram, that intersection is ripe with insights and learnings and oversimplifications and hype as well, which we do need to pick apart if we're going to learn and progress together. So that's what I typically do. And for 4 million plus people every week, I'm read via my column, the Tech Times Africa column. That's by through with the business report as well as African Tech Roundup, and then of course the African Tech Roundup podcast, our flagship, which has pretty much put me in the ear of a lot of my colleagues and friends around the world, such as yourself. So that's me in a nutshell. Thanks for having me.
I'm humbled. 4 million is a population of a country.
Well, these days, I mean, they might read 2 lines and click get back to their TikTok. So,
Mr. President, that's how politicians have to. That's how much attention politicians get to convince you to vote for them. So if 2 lines is all it takes, you're still running the nation, and we're very excited to have that, Mr. President. So yeah, as we go into the conversation today, just a reminder, we are talking about expansion, scale, and what 2026 is going to look like based on decisions that have been made this year. And I've just been big on decision, quality of decisions in the last 2 years, and it's been one of the biggest, if not underrated, quality of a leader. The decisions you make within constraints, the trade-offs you have to make every single day just to navigate Africa. And yesterday, I think the last 2 days, the biggest theme of conversations that have been happening has been the constraints in Africa around bring your own infrastructure or build your own infrastructure, which is one of the biggest factors that impacts the marginal cost of setting up products and services, or even expanding into new markets, totally different territories, totally different contexts, and all of that. Over the last 2 days, we've talked about capital discipline and product decisions. Today, we are focused heavily on reflection as we round up the year with the roundup of this series as well. And we would love to go more practical rather than theory, because I always say you can find information on Google, you can find information online. What you can't get online is context, and that is what you pay experts for. And so as we go into this conversation, and we can take turns to respond to these 3 packed prompts. What did 2025 reveal about the true cost of scaling across the African market? Where do you think these ideas of Pan-African scale meets its limits in terms of infrastructure, policy, people, adoption, investments? The list goes on, and competition as well. You can't ignore that as a driver. And for those who scaled successfully in 2025, what did they do less of and not more of? What are some of the pivots you've seen that have maybe in 2024 that impacted the direction the winners had in 2025, and potentially is a signal for 2026 for people to take cues on? So yeah, you can take turns, share your perspective either from your company or from the industry as a whole. And yeah, you want to go, Jeremy, first?
I had a feeling you were gonna call me first. Yeah. No, I think it was a very revealing year for me, especially because of what I've said. So starting off in one company and then ending up in another, going from one company that was already pretty much established across the continent and trying to entrench further. I think that it's the year for me that the word scaling got sort of redefined into going away from what historically was that whole you must grow regardless of the cost. So now beginning to see that even both companies were thinking more about durable distribution, the unit economics, being more responsible, and trying to. You asked about what would they do less. They did less of making assumptions, right? Visa Jalakasi said this thing about how the tool for expansion is an airplane, because you actually have to be in the markets you want to expand into to understand how it works. And the difference for me was I started off the year with a large focus on the Anglophone aspect, or the Anglophone regions in Africa, and then ended up on the Francophone region. And the one thing that I think that was the key ingredient to being able to successfully deploy in some of these markets was patience, right? The patience to understand the difference in the nuances in how you can, get activation, repeat usage, and also retain more than just the quantum accounts. The patience to realize that, okay, your growth team has to be more partnership heavy and compliance heavy in order to be able to actually establish yourself within the market, right? The market entry will now shift from just the PR launches to more like operational readiness tailored to the market that you're in. And, like you said, bring your own infrastructure. So settlement rails, dispute resolution, even engaging with the regulators. I think that it was one of those very, very revealing years for me. But I'll go into more detail. I think I'll just pass on so my colleagues can also share what their initial high-level sentiments were. But patience was my theme for this year when it came to market expansion.
Love it, love it, love it, love it. Tendai?
I would say from my perspective, it's been an interesting journey, because initially when I thought about expansion, right, you think about geographically going out there and planting all the flags, you're across the entire continent, you've got your name everywhere. But I think what kind of reflection and experience has taught me over this year is to focus more on deepening. So there's a time for planting the flags, yes, but there's also a time then for deepening your presence in that market, right? So we've spent a lot of time now in markets where we had done previously the work of, okay, making sure compliance-wise you are, you're right, you've planned properly, and then actually doing proper detailed go-to-market strategies. And those go-to-market strategies can't be just desktop. So you can't sit and ask ChatGPT and ask Copilot to tell you what a person in Kenya is looking for versus a person in Zimbabwe. You'll get some insights. But I can tell you, when I get off a flight in Nairobi versus when I get off a flight in Kampala, those two are really completely different countries, right, and experiences. So it's been for me a year of making sure we understand the markets, understanding the problem that we're solving for, as well as opposed to just planting flags, make sure you are deepening your offering to actually your consumers in that market. And one of the interesting ways that obviously I think everyone is kind of been doing this year, but we've particularly found the need for it, right, is partnerships have become less. I think there was a time in fintech and in financial services where partnership announcements were a lot of like PR announcements and this big brand and that big brand. But now it's more strategic around what does this partnership bring and what solution does that partnership bring to your customer, or how does the partnership improve the existing solution. So I think to summarize, I'd say two specific things. One, less just planting of flags and more deliberate and deepening your presence and focusing a lot on what that market requires and that consumer is looking for. And then two, continuing ensuring that the partnerships you're going into are not just for PR, but they are strategic. They might not instinctively be obvious that they make sense. Sometimes you may appear competitors, but as soon as you look at the benefit that your customer is going to get from that, that will guide whether it's a right partnership or not. So I think, I'll pause there and kind of.
I love that the two of you have highlighted something very important, which creates a very important segue into Andile's commentary. And Andile, as you speak, I would love you to share more about, while you give the roundup of what you've seen, what has storytelling, because I hear a lot of optics and vanity metrics being one of the biggest distractions of Africa's ecosystem in terms of painting the real picture. As you speak, I would love you to shed more light on some of these storytellings. We've seen some massive companies close down this year. as a result of, hey, we raised 50 million, 20 million, 30 million, we secured XYZ partnerships, we had 1 million customers. All of a sudden, tech is stuck, product is stuck, market is stuck, operations are stuck, investors are worried, all of that stuff. How has storytelling impacted the last 2-3 years of Africa's ecosystem, including beyond that, your own roundup of the year? Yeah.
I think there's a maturing and appreciation of the difference between having an investment mindset that's speculative and an outlook that's based on fundamentals. So taking something that's a big hype point right now, and I know it feels far removed from us, but AI and the NVIDIA sort of AI, well, headlining the AI bubble, quote unquote.
It's not that far removed.
Well, I was going to say, and by extension, bringing the question home as far as, well, if one of our biggest players in our scene, i.e. Cassava, is partnering that closely, I mean, what's our exposure to that bubble? We're seeing Econet moving to list on the Zimbabwe Stock Exchange. And so there's a lot of conversation, and it makes sense, especially if people are invested by stock exchanges and I call it speculation kind of unkindly, because they're disciplined investors, obviously, and day traders who do that. So I don't mean to sort of pan that as a casino. For some, it is. If you're a retail trader, you don't know what you're doing. But my point is, there's a world of thought that is appropriate in thinking about investment a la, speculative stock-led investing. But then there's also perhaps a more grounded outlook that is based on fundamentals, i.e., even if a stock exchange went to zero, would a company effectively still be, profitable? Would it still, run revenues? Would it still have customers who love it? Would it still be answering questions within market that have answers that look like dollars and whatever other currencies are used across our cards? And if the answer is yes, then we need to be mindful of the difference between those conversations. Now, they are correlated, certainly, as we can see now with the whole Econet announcement, leading to a bunch of speculation and asks in pragmatic sensibilities about whether the value is going to erode or somehow be augmented by that move. I think those are healthy conversations. But I think to the broader question you're asking, I think maturing over the last 18 months or so of appreciating those distinctions. And we have on this call people who in the main operate in the world of the real fundamentals-based sensibilities of, Mukuru's assertion of being a neobank, which is the first time I've heard it. I've heard that framing. I've always thought of you as a remittance business, which is great. But I think coming from a company like you guys, knowing what I know about Mukuru and your growth story and the unfolding of your sort of your footprint, I can tell you that that's not I'm not inclined to hype check you on that, because I sense that the fundamentals that stem that ambition, or that stand behind that ambition, are linked to literally, tills ringing in the background somewhere, and real problems being solved for Africans who are like, when you say Mukuru, it means something to them, right? And so from that perspective, I think there's now, and we have, and I don't want to throw the entire VC, of which I was part for nearly 3 years, under the bus, but I mean, it has an outsized role in framing and taste making, in informing what is a signal worth minding and a trend forming, etc. And we need to be mindful that sometimes those oversimplified narratives, however well-meaning, however aspirational, however exciting and praiseworthy, are not always serve our long-term interests as a market. I'm not sure if I answered your question, but I think that's basically, from where I'm sitting, something I'm grateful to observe in terms of storytelling and narrative driving.
And I hear you very loud and clear, and the AI example is a perfect one. Yesterday, I was citing examples of every year there's a key word that becomes overly abused. This year has been artificial intelligence. Last year was probably blockchain.
Not stablecoin.
Stablecoin.
Also
Last year,
stablecoin. Oh
Stablecoin?
it has been
Stable
stablecoin and artificial intelligence. Last year
Yeah.
was heavily, I think, big data. Was it big data or remittance? Remittance was last year. The year before was.
And these are all the same WhatsApp group.
It's crazy.
Right? It's like you wake up one day and decide these are the words, these are the phrases for this year.
These are the homies hanging out. All of
Every
the WhatsApp, all of
conference,
the above.
every panel.
We-
I remember at one
It's
of
the
the
title of the
events
slide.
this year, I think it was a Semaphore event, they were literally tracking to see who will be the first person to break the silence on using artificial intelligence as an example.
So that was literally me today.
Right?
You're it, Adila, you're it. Tricks on you.
So you owe everyone around. But I hear you guys. I think leading to our second part of the conversation for me is a very important thing we've all signaled, which is what's the role of like PR, and especially in launches. Like you announce to signal sometimes investors, you announce to signal markets, you announce to signal users that hey, I am coming. I am teasing you that I am coming. Watch out for me. Teasing competition to reposition themselves, sometimes to give you way, sometimes to create blockers for you to counteract, and all of that stuff. And artificial intelligence and all the other in the previous years, every single tech that has received a big hype has created or stimulated agency and sort of created some sort of FOMO, right? It forces behavior. We've seen policies readjust, reprioritize, policymakers reprioritize their focus areas to start to deepen down, form focus groups, prioritize national budgets towards investing in some of these areas. We've seen user curiosity. People are starting to learn how to become prompt specialists, prompt experts. We see a lot of content creators creating content around educating the mass on these technologies and what disruption it could. So there are people who narrate the agency of it. There are people who educate and build capacity. There are people who criticize it. And then the last part for me has been R&D spend directions, which is stimulated heavily by PR. But then there's also the group of people who use the same tool in the other form to create some fake buzz to draw traction for the wrong reasons, gain visibility, raise money, and use them for their own, etc., etc. We've seen companies close down as a result of that. When you think about expansion, and I think Tendai mentioned something very important here, deepening the existing market you are in, we always find founders and most guys trying to play the whole like Silicon Valley game of the US is a single market. Like in as much as there's federal and state level laws, all the agenda is always driven by federal direction, heavily by federal direction. You may start from a state that is more policy friendly or early adopter friendly, or has a sandbox environment that enables you to experiment these ideas. But when you come to Africa, the ball game is different. And people are quick to want to be in multiple markets or build footprint across the continent, losing sight of the marginal cost of localizing in each one of these markets. What are from your perspective, some of the trade-offs that have had to happen between speed, compliance, and capital efficiencies? And from your perspectives as well, you see MTN consolidated its markets, downsized in some markets, sold out in some, just so that they can focus on performance. From where you sit, which countries, and this is basically a signaling question following the trade-off question, which markets and corridors have quietly outperformed expectations that probably the PR or the hype is not having sight of those data and performance? And some of you only announce your reports next year for us to know who really did right. But if without breaking your non-disclosure agreements with your companies, what are some markets or corridors that you've seen quietly become like outperforming the ones that have had PR positioning in terms of like real market activity? And if you had to do trade-offs next year, which countries will you trade off? What resources will you trade off? Where will you prioritize your resources? So you can focus on country-specific or region-specific or product-specific conversations here. I'd love to hear your thoughts.
That's a lot.
Yeah, there was a lot in there. So, I mean, as you were talking, one of the things that came to mind in terms of how expansion, I know we think in terms of geography and typically when you ask the question, the kind of innovation that's catching my attention right now in terms of expansion are people mining existing structures that haven't been optimized. So a good example, as you were talking, actually, I just pulled up a shameless plug, an op-ed I wrote. An op-ed I wrote entitled "How Routine Township Shopping in South Africa Now Buys You Invisible Funeral Cover Through Embedded Insurance." Right. So we have SAG Ventures launching a product called Purchase Pal. It's underwritten by Sanlam, and it tucks funeral insurance into everyday groceries. So the same way those of us with Visa, credit cards benefit from invisible insurance for for certain aspects of our travel, etc., or certain purchases you might have. There's all kinds of insurances some of us aren't even aware of that come into play as soon as you swipe that card and are part of the sort of the Visa halo effect, right? And so now you have innovators like Prince Nade, who of SAG Ventures, applying a similar mindset to why isn't an everyday South African buying groceries at their local supermarket? Why aren't they covered similarly if if they shop there on a regular basis? Why are the people who are paying to try and get those folks to be regular and sticky customers not finding smart ways to embed incentives like insurance into their product, absorb the margin, use their sort of retention attempts to what they would have otherwise spent to try and retain or keep a customer? Why don't they add value in that way? And in asking that question, he opens up a whole new world of value for a legacy insurer like Sanlam, a shopping group that serves a big save, which basically serves township markets, and of course now makes it possible for people who would ordinarily buy certain products from Big Save on a regular basis to get funeral covers as a side effect. Now that's, to me, real economy, adding value. No one had to leave South Africa in his case to create that value. No one had to sort of move. He didn't even have to take.
It's like a multiplier effect. Yeah,
there's a multiplier effect. There's a real world impact. There's a real economic impact. Everyone's smiling at the table. You've got real live impact stories, like an individual who was able to bury a relative because they were covered in a way they never would have been otherwise. These are the things I'm saying. Oh, this is amazing.
I think, and Tenda, sorry, before you come in, I think vertical expansion, which is basically deepening in an existing market, is usually it's easy to put on paper and in strategy. Hey, and these are the list of products I'm going to serve the user, blah, blah, blah. But very difficult. That is why I think again, and I stand to be corrected, people tend to fall for expanding into new territories and maintaining the most basic version of the product in those markets rather than deepening the value proposition for a customer banking their entire life and ecosystem. In my previous banking life, we've had to build strategies. Jesus, we pivoted group strategies 4 times in 2 years, from ecosystem play to platform play to value chain play. It was
transformation.
Being like a single one entity to all customers. You just crossed. It was just chaotic, right? And I think it all comes back to data. And Tenda, as you address this question, one of the key things I would love to hear is how are you leveraging real-time insights and analytics to inform decisions around like vertical expansion, which I think I loved how you opened the conversation about deepening your presence in existing markets, planting flags, focusing on consumer-focused expansions within the product verticals that you offer, and then strategic partnerships and not optics. So I'd love to hear your thoughts on how is your real-time data and analytics? Because what do you use your executive reports for? What decisions?
Do you know what, Foster, before she answers that, I mean, you were going to say something to that. I feel like you were inspired.
No, I'll say it. Don't worry, Andile. I'll throw it all back in there. So I think I'll answer the data question as well. But I think I wanted to just kind of jump into what you were saying, Andile, that actually speaks to when I was framing Mukuru as a remittance-led neobank, right? So that has been the experience that we've lived, right? It's a sense of, okay, first you're planting the flags, but then you look at your customer base, right? And you're like, our customer base does not only need to send with us, right? So we then kind of we've spent years building that ecosystem where first you could send with us or receive. You could store with us, which is now a store of value, which is the Mukuru wallet. And then you can spend, which is now the products that are in there. Then we've added another one via strategic partnership in South Africa with Jumo, which is now you can also borrow. So for me, that just kind of shows you like that's deepening and that's listening to the customers, right? So if we talk about, let's say, our 5 core markets across Southern Africa, we've ensured now that we've got wallets across those. So there's a Mukuru wallet across those territories. Within that Mukuru wallet, you can do different sorts of things, either because the development of it is a different level, so you've got different VAS products, or it's depending on what that market wants. So for me, I think those are the key things, right? It has to be about Tendai. It has to be about Jeremy. It can't be about Mukuru. As soon as Mukuru, then we are pushing just remittances, or we are pushing pay DSTV to someone in West Africa in a country where there's no DSTV, right? So I think that's kind of the point I wanted to just raise around that deepening, that for me, that's where I see the practicality of it is when you've gone and you've planted those flags, don't just do that. You have to now systematically then layer on those products. In South Africa, for instance, I mean, a few months ago, sometime this year, we've launched vouchers, right? So for a lot of us that have banking, we bank with an FFNB or a Standard Bank, whoever you bank with, you go onto your app and you can buy your son his Robux voucher. You can buy a whole lot of vouchers. You can do all of that. But for the emerging African consumer that maybe doesn't have the traditional bank account, but has a Mukuru card in South Africa, now you can go either via your WhatsApp or go on the app and guess what? Experience the same thing. You can now apply for a loan. You can now buy your son those Robux. You can pay for DSTV, all those things. So I think for me, that is, to be honest, that is the goal, and that is why we should all be here. So you can't do everything, right? So you can't be an expert in everything. And that's why I was also touching around the strategic partnerships. So all of this, as Mukuru, we haven't gone and built some new voucher system, you know, where you can buy a Robux voucher or some brand new loan infrastructure. We've strategically partnered, and that's enabled us to serve now the consumer. So yeah, I'll take a pause there. And then just to bring it back, Foster, to your question around data, right? So, I mean, over the years, obviously, you have customers. We've been doing this for about 21 years, right? So there are some customers. We were chatting about a customer the other day. Let's call him Dave. Dave, who's been sending with us for 10 years. And now the amount of data we have is we know when Dave sends. We know why Dave sends. We can tell when Dave is running out of money. So now with all of that information, that informs which products you also want. That also gives you that entire customer base to run. Is it surveys? Is it the sessions where you're asking guys, what are you into? What are you not into? Focus groups, sorry. So all of that, right? You're basically just using existing data based on the touch points of what Dave is doing in the background. And also you're able to communicate, right, with those customers and understand that. And I mean, as always, I think we can all agree, we then sprinkle on the dust of what else is it desktop-wise that's being said, what's happening in the competitive landscape, and also kind of around a table, what's your opinion, what's your experience. But I think ultimately it's understanding what that market is looking for, and how do you continue to unlock value for your existing customers. And then the new customers, obviously, at that point will continue to come. Ironically, it actually brings in a lot more customers because now the depth of your product is cool. So I think I'll take a pause there, but just that's kind of my thinking, and it's been what I've been living and breathing and kind of thinking about for the last couple of years. And to be honest, it's been a bit of an internal challenge with myself as well, because sometimes you get used to being, the flag is launched and then you tick a box. You know, it's very easy, like we were saying, those metrics we like, it's ego based, right? We have launched this many countries, but what does launched mean? And I think that's more where we need to start challenging each other in the industry and saying, what do you mean you launched? What does that mean? What are you offering customers?
Yeah. And again, as someone who previously worked in VC, I've been listening to you and I'm realizing that really, I mean, the VC narrative incentivizes certain kind of narratives and projections of progress, right? Or assertions or aspirational projections of progress that don't necessarily map to true, product market fits, true profitability when a product is deployed, true through use and engagement in a market versus just, I suppose, paying to appear in a market. And I think these are all things that we need to start picking apart, because sometimes the room is VC oriented, and the people chasing the money are trying to build things that need jet fuel, and therefore the kind of interest that is vying for that. But I think what's been problematic is a mapping of that sensibility that would render everything Tendai said, it took them 20 years. Oh my word. It's like, buddy, they've been viable, profitable, growing, enriching their, the verb in the lives of many a Southern African. What do you think success looks like?
Yeah.
And I mean, Angela,
and maybe they're not a $1 billion business, but in your world, in our world, like, they may as well be.
Yeah, and I mean, just to throw into that, right, is like, quietly while you're building, now it's Southern Africa, but we've entered East Africa now. We send and receive out of 3 East African territories. So that expansion, like you're saying, is like, it's humming away, but you have to layer it, and it has to be effective and impactful. Can't just be ticking.
And generally, quality of, like, it's all expansion and scale is always about the quality of decisions you're making and informed by analytics and insights. And I like the way Tendai put it across. After 21 years of operations and having gathered data on a particular customer, the value proposition is clear and straightforward. I understand your patterns, I understand your need, I understand your timing and all your possible constraints financially, and so I build a product for you, fully validated. Chances of this product succeeding is extremely in the highest percentile, right? Heavily data driven. Ezra, and from where you sit in your previous capacity, you've had to work with data to help the financial services industry make more informed decisions and be more inclusive in how they build products and services. I'd love to hear your perspective on this conversation, how you, from your experience, analytics as a service has informed product and service personalization, with whom and how it is working, and what really is the opportunity for Africa in terms of unlocking what that looks like. And for decision makers like Tendai, what does that even mean for her to be more data centric in making quality decisions and forcing the board room where these prioritization of epics happen?
Yeah, my mind is thinking about so many things of what everybody has said, but let me try and answer from back to front. So I think when it comes to, our business is entirely centered around data. But when it comes to making leadership and executive level decisions about either how to expand, how to give customers more value, one of the mantras that I think has proven to be very valuable is to try and make data informed decisions as opposed to data confirmed decisions, in the sense that now there's so much data available to validate any opinion that you may have about any market or any approach, right? So sometimes it's easy to just say, listen, Botswana is a tiny country, like you were saying, and Dile has 4 million people who read there. That's double the population of Botswana. So nobody really wants to go into that market because it's quite tiny. But in our experience, if you actually went into the market, the same product in a market like Botswana, because of all the supporting fundamentals that are there, you are able to make more in a market that is less than 2 million people than, let's say, in a Cameroon or even in a Ghana where there's population in excess of 30, right? So it's very important that in terms of making the decisions, you actually have validated data that match the realities on the ground, and not, like Tendai said, sit behind a ChatGPT or Google it, right? Now, if you like, even tying it back to some of these, some of the things that were said before, right? One of the assumptions that typically people make is that expansion equals more countries, but sometimes it's not as straightforward as that, right? It's about what stage you are in, right? For example, coming from Jumo, that was already sort of live in multiple countries. In that particular instance, the smarter scale is deeper density in fewer markets, more use cases per customer, more reels per corridor, just giving more deepening. But in the case of Ezra, you actually did have to plant more flags because you are in an earlier stage than a more established provider. And I think just to go, you to link it back to the question that you earlier asked about, in this process, how do people actually leverage storytelling based on the data that they've gotten and what they've actually achieved? I think what I observed is that in this phase of the market, the PR, I don't like to call it PR, but the storytelling has shifted from more hype generation to more like expectation management, right? The investor behavior has become more, how do you say, they are going away from less fantasy valuations where you've just grown just to show the numbers.
It's discerning.
It means
that
more
discerning now.
Exactly, more discerning, more forensic. You now have to sort of you have to talk about how you have to ground it in the realities, right? In the earlier cycles, PR would be rewarded with bold narratives about your total addressable market, the Pan-African scale, the user growth. Today, those narratives can backfire if they're outpacing your operational reality. Public signals, press releases, interviews, all of these sound bites, like they are increasingly read by investors as forward guidance, not really as marketing. So if you make a mistake in how you put yourself out there, then you might end up doing things like overselling, and you are inviting fantasy valuations that will later collapse when the due diligence elements come in. Right? One of the companies that went that IPO this year that I really focused, sort of followed their story was Optasia, right? This is a competitor to the Jumo, the Ezras, Jumo and Ezra are basically falling behind. But the way they framed their growth story around the fundamentals first, the impact second, not the other way around. When they were trying to lead up to the IPO, was very interesting. They consistently told a story about my boss likes to call it the hard metrics. So diversified revenue across 30 plus markets, repeatable telco distribution channels and bank partnerships, strong credit discipline, sustained profitability, before then layering on the social impact of the short-term, credit access. The impact of the narrative was real, but it was not, structured in a, how do you say, like a promotional manner, and it ultimately worked better for them in their favor. So I think,
magic.
Yeah, and I think 2025 taught us that scaling in Africa is less about speed and more about stability, stable rails, stable partnerships, stable unit economics, and stable capital. The winners are not the loudest storytellers. They're the ones who also embed the boring stuff: regulation, FX, distribution, first class product constraint. So I think the ecosystem
credit
will
ratings,
now
baby, come on.
Credit ratings.
Credit, of course, everyone's favorite.
I think as we come to the close of this conversation, and thank you very much, Jeremy, for that bird's eye view on those dynamics and the recommendations you've made. Punchlines there, I can see in the public comments that people are really excited about some of the things you're talking about. Predictions, crystal ball moments 2026. What are the top 3 key things you are likely to see in the industry, or you anticipate seeing based on trends that have happened this year? We can just take rounds and then wrap up. Yeah.
I'll go first to saying I don't do predictions. And so that's very easy for me. I can tell you what I am hopeful about. I am hopeful that the gap and the opportunity we have of not being AI ready, AI read, because we're just not feeding the LLMs like other regions in the world, that becomes more an opportunity than a gap for us. And that those of us who are already, when I say those of us, I mean innovators like those on this call who already have traction in the market can use this window, because I don't think it's this window of opportunity, because I don't think it'll be an opportunity for forever. I'm hoping that they'll be able to use this in singular ways that newcomers will have to catch up and rather than them be on the back foot. That's my hope for the next cycle.
Tendai?
Andy, I absolutely love that I don't make predictions. I love that.
Yes, I was about to say the same.
I absolutely love that. That's amazing. But I think for me, Foster, I think I'm predicting it and also very hopeful. And it's one thing I continue to speak about, right? Is when we talk about one Africa, we don't mean one country, one consumer. We may talk about harmonization of KYC, harmonization of regulation, all of that. But I am hopeful that we continue to keep things customer-centric, that we continue to produce products for the consumer and not for ourselves. So that's what I'm predicting for next year. Less ego, more focus on customers. And I'm excited to see more strategic partnerships where you take out all the ego and all the history, put your heads together and figure out how everyone can succeed, including both parties as well as the consumer. So those two for me. Yeah.
Yes, please.
Jeremy?
Yeah, to borrow the line, I don't do predictions because I was one of the AI blockchain stablecoin.
It's you. We found you, Jeremy.
Yeah.
Oh,
But I think Andile is right. I think because our business model is primarily predicated on having partnerships, strategic partnerships with telcos, with banks, with innovative platforms like Mukuru. One of the things we have come to realize is that the distribution channels are not owned, they are rented, and the rent is due almost every day, and not just in a revenue share that benefits everyone, but now there's more collaboration around, okay, making sure that there's actually responsible consumer protection, there's corporate governance, there's risk and KYC monitoring. And when you see some of the success stories like the Optasia IPO, I think it sets the precedent for how fintech in Africa is expected to scale and to be valued. It sets the precedent for how the market now rewards businesses with real revenues, diversified distribution, disciplined partnerships as well. So I think that we're going to see a reframing of what success in the industry looks like, and less, hyped up storytelling and the like, and more real partnerships, real contracts, real revenue, and real value to the consumer. Those are my conservative predictions.
I mean,
very interesting. Thank you
Yes.
all very much. I
yes,
think
please.
has been very, very, very clear.
Yeah.
One thing that stands out is the next phase of Africa's fintech will not be defined by speed and headlines. It is going to be by disciplined decisions made under constraints,
By the grace of God.
a long-term view. The second thing
Please.
for me is skill will reward those who sequence well. Being strategic in how you sequence your expansion, your product innovation, what you ship to markets, the investors you receive, the PRs you make, partnerships, partnering wisely, and building for durability and not just momentum. And I'm very excited. Thank you all very much. Thank you, our panelists, for making time to generously share your contributions and your bird's eye view of what has happened within the African ecosystem. And to everyone who joined us online over the last 3 days, we are very, very grateful. We look forward to continuing this conversation at the Africa Fintech Summit 2026. We've announced it. Watch the video at the end of this session to get the dates. It's April 14th in DC and 16th to 18th of November in Kigali. Make sure you RSVP as soon as possible. The program is going to be going live soon. We're going to be announcing very exciting and new things in the coming year over the next few weeks on our social media channels. So stay connected. Follow the Africa Fintech Summit on LinkedIn, on Twitter or X, YouTube and Instagram, and subscribe to our newsletters. We have over 90,000 subscribers now on our newsletters and growing. Every week we publish what has happened within the ecosystem. And so stay tuned, stay excited, check out our websites. It's fully restructured now, beautiful. You can browse even video content on there, very interactive. We have created a community there so you can sign up, follow people, DM people, all of that stuff. Check out their LinkedIn, update your own profile. And Andile can now have a public profile listed on the Africa Fintech platform. Same with Jeremy, same with Tendai. So yeah, I'm very excited. Merry Christmas, everyone, and enjoy yourselves. Make sure you make time for your family and loved ones and stop working. Next year,
We're
that's what
trying.
more family time.
As soon
Thank
as I
you.
leave this call.
Over to you, Mickey.